Hi, I'm Jason Schenker, President of Prestige Economics and the Chairman of the Futurist Institute. I want to talk to you today about the latest inflation report. It's for wholesale inflation and the month of December 2023. So what happened? The month-on-month total producer inflation fell by 1/10. The core producer inflation, which excludes food, energy, and trade, rose modestly by 2/10. So what happened to the year-on-year rates? This is the bigger story. There was a 1% year-on-year increase in producer inflation and a 2.5% year-on-year increase in core producer inflation. Again, that excludes food, energy, and trade. For goods inflation, prices are down slightly year-on-year by 0.8%. This report is pretty benign. Producer inflation rates are, as you can tell, relatively low. And producer inflation feeds through to consumer inflation. This is why this report's important, because the Fed is trying to make decisions about interest rates, and they'll be making that largely in the months ahead based on what happens with inflation. After all, the Fed has a dual mandate: full employment and low stable prices. We have full employment, jobs numbers have been very good, but prices for consumers are not low and stable, even though in the producer inflation report they were. There is one caveat to today's report, however, and that is from November revised levels, we saw modest increases in both the total year-on-year PPI and the core PPI year-on-year. So both of those are up a little bit year-on-year, and that's not moving in the right direction, although there's not a one-to-one correlation between what happens with wholesale inflation and consumer inflation. But after yesterday's CPI report, the December 2023 CPI report, where we saw headline inflation accelerate to 3.4% and core inflation stuck at a still very high 3.9%, falling only modestly from 4% in November, those numbers, 3.4 for the headline and 3.9 for the core of consumer inflation, are well above the Fed's 2% target, which means an imminent Fed rate cut seems unlikely. And today's report for producer inflation, wholesale inflation, although low and benign, the modest acceleration in those headline and core year-on-year rates indicates that maybe the Fed can pause. And obviously, the biggest priority is going to be what happened in that CPI report, but a Fed cut, we don't really see that until likely Q3, but in June 2024 at the earliest. Follow for more.